Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Good day. Sound is fine. Fine. Let me, good day Sandra. Thanks for confirming the sound. Let me display the PowerPoint presentation. Asian session live market analysis on December 6th between 5 and 5:30 GMT. So it is a new week, the second week in the month of December, the last month of the year. So we could come across good volatile moves in the market. So we should be able to perceive it with the right sense and try to earn from that other market without any prejudice or without any preconceived ideas. So this market we will track it using the live market quote page. Let me give the live market quote page as the link for the same. I'll fix the camera over that other live market quote page. Currently, you come across euro is trading around 1.3354, 1.3356. The low is 1.3334 and the high is 1.3441. You come across 59 pips negative net change from that other Friday close. And on Friday, after the non-farm payroll, they gained the levels and quickly dropped and created the confusions for that of the traders, and subsequently gained further levels from that of the early European US session onwards. And then after some brief volatile moves, they made further gains in the case of euro and GBP, reaching the all permissible levels, and they reached the psychological level 1.34 in the case of euro. After making an upward gap opening and making a small gain, they started making the slide during that of the Japanese session, and they are expected to form up towards close of Japanese session. So let us review it. Currently you come across euro is trading with 56 pips negative net change, whereas GBP is trading only with 36 pips negative net change, currently trading around 57.37, 57.41. 57.38 is the low. Currently GBP is staying near that as the low, and the high is 57.73, and you find that GBP has made less drop when compared to that of euro. In order to make the drop in the case of euro GBP, they gained on Friday and then subsequently they are making that drop now. For that purpose, they have been gaining the levels in euro first and followed by that GBP. But many thought that GBP does not have the strength to go up, and they are thinking that probably it will be lagging behind, but now they have proved it wrong, and they just gained subsequently the level up to 1.5773, and then now made the slide which is lesser than that of euro. Then in the case of yen, that was the first reaction. From that of 83 level, it came down to 82, and which has given the surprise for the many of the traders, and they thought that non-farm payroll is exclusively meant for yen, and they dropped it to 82 area and then gradually gained back the levels. Now we come across USD yen is trading 42 pips positive with the 42 pips positive net change. So currently trading around 82.94, 82.97, and 82.58 was the low and 82.98 was the initial high. Then in the case of USD CHF, from that of parity, it has dropped about 250 pips, and then it is gaining back again. So you come across 0.9767, 0.977470 are the current levels, 0.9742 was the low, 0.9777 is the high, and the net change is about 34 pips positive. When euro has dropped about 57 pips, CHF has gained only about 34 pips. So now you can understand that CHF, they wanted to hover around in this particular area, and probably without much of a drop, they could just induce the traders holding long positions to liquidate and then try to gain the levels in the case of USD CHF. And then we could come across from tomorrow the contrarian move, gain in the case of euro as well as in the case of USD CHF. Because of that, euro CHF, which is trading around 1.3047, 1.3050 area, 1.3025 is the low, 1.3095 is the 1.3025 is the low, 1.3095 is the high. About 11 pips negative net change is seen. So they are just making a weak beginning false move in the case of Euro CHF, and also in the case of Euro GBP, weak beginning false move of gaining and holding higher level. They are trying to make it. And in the case of Canadian dollar, and it was arrested to go below that of parity, and currently trading around 1.0048, 1.0052. The low was 1.0023. On Friday, they came down to that level of 1.0007, and then subsequently they are holding it here. And 1.0058 is the high, and you come across 8 pips positive net change. When Australian dollar has dropped about 48 pips, Canadian dollar has gained only about 8 pips. So this way, they try to make a contrarian move, even though you come across the USD gaining most of the currencies, but the denominator currencies are not showing that way. They are only showing a nominal value with regard to the gains or USD gaining more. But in the case of numerator currencies, they are showing more of a USD gaining move. This way, they are making a contrarian move and confusing the traders. And what their intention is, let us try to first analyze the algorithm or see the expected market moves given by the algorithm. Then followed by that, we will go into that of the initial lows and the highs and see what the market reading says. Now with regard to the expected market moves, during that of the Japanese session, volatile moves and firm up towards close is the expected move for Japanese session. And European session, there could be further volatile moves in the middle level, and then towards close of the European session, a slide is expected. So you could come across the big beginning false move happening during that of the European session. So you know very well that from the second week of the month, normally they make the week beginning false move. And last month, you would have noticed that most of the time, the week beginning false move they made during that of the year session. And this month, you could come across either during the Japanese as well as European session. But year session, they could expose their intentions, because they will, once the volume increases, they are expected to make the move according to their intentions. So during that of the US session, volatile move and a rise or the expected move. So weak beginning false move could be seen during that of the European session, and at that time probably one can do the buy. Now, you know that on the last week of November, we have seen that there was an euphoric feel with regard to Irish problem, and everybody was talking that Irish problem is a never-ending problem. So it's very hard for euro to come up, and probably Germany could withdraw from that, or any other country could withdraw from that the common currency. All those talks, all imaginary talks they created as the possibilities and induced the fear. And nobody is going to question whether such talks are in continuum or they are all just abstract statements made and subsequently they have forgotten. And now you come across that US economy is being highlighted, and non-farm payroll, they have made a significant gain in the case of Euro and GBP, even though it was nominally positive, but they said it is less than their expectations, and then subsequently made the gains. So if not the non-farm payroll, they have simply taken that unemployment rate and they have taken other factors and said that US dollar has to become weak. Then afterwards this morning, during that of the Japanese session, you would have noticed that Bernanke has made the speech, and because of that Euro and GBP has dropped. So every time they are going to give that sort of attributes for their expected, for their intentions. And if you try to follow them, and if you think that Irish problem is there, Euro we can only do sell and buy trade, then we will be trapped. And if you think that the Bernanke has given a speech and he is confident that US dollar is going to strengthen, or probably if he says that we are having a US dollar strong policy and things like that, they could make use of it to give the trigger in the market, but the players have got their own intentions to make the moves in the market, and you could see gradually such triggers are being discounted and they keep the market ready for the new triggers and try to make the moves as a surprise for that of the traders. So when I was telling that during the month of November that drops a buy opportunity, and a lot of people were criticizing and they are telling that you are the only person telling that buy like that, and you are telling every time it will rise. So obviously market means it has to drop and rise. So when the right comes, you claim the credit, etc. There are so many comments and things like that in the blog. Probably you would have noticed it, and that shows that how that uncertainty the players have created so effectively among that of the traders. So that shows their money power, and also how they are able to induce the traders to perceive wrongly the market. Even though I have been consistently telling that they drop the market and buy and gain the market and book profit with regard to their buy positions, and still their act has influenced most of the traders to just liquidate their positions and try to turn short and get trapped. Because I receive so many messages now that they have been trapped vulnerably at the lower level. What could be the remedial measure? So this is how on a monthly basis they are bound to trap the traders. And if the traders are not able to come out of such mindset or feel, it is extremely difficult to earn from the market. It is not that the players are finding it difficult to earn from that of the traders. It is not at all like that. They can simply create the trend and simply create the sentiment in the market and act against the traders vulnerably. And you know that early of November, the FOMC quantitative easing 2 was used as a trigger to make an upward stop and then for the drop. And everybody thought that US dollar is not going to gain afterwards, but the players showed the gain. And subsequently, when all traders turned long, they dropped further down and accumulated from them. Then they are freely liquidating the long positions at the lowest level, and then gradually they use the non-farm payroll as a trigger. And before that, they used the ECB press conference, and for that they made one quick downward move on last Thursday, and then quickly reversed it. That showed that how exactly they made an extended downward stop and gained the levels. And during non-farm payroll, they are not dropped much. They made only a small dip and then subsequently gained the levels because they are already trapped the short sellers at that time. And during the initial gain, a lot of traders thought that, okay, probably it could reverse again, but they have been trapped, and then subsequently they made further rise. So normally the traders have got a tendency to sell during the rise, but they fail to understand that they consistently rise for at least 3 times and then only drop. So I explained it in my trading system how exactly the players do such moves. So if you are able to understand after the third rise, if you try to take a sell, then probably you will be able to get profit. But if you are in a hurry and try to take a sell position in the first rise itself, then from there they could gain another 50 to 60 pips or 100 pips, then that will create fear for the traders. Because most of the traders have got a tendency to take positions without a stop, and because the funny part is, on the downside, when Euro and GBP are dropping, they are asking, okay, I'll take a buy in Euro and where is the stop? I'll take a buy in GBP, where is the stop? And they asked so many questions. I explained what could be the possible level for the stops, etc. But quickly they turned short and they never asked where to keep the stop. So that shows how the players have created the sentiments in the market, bearish sentiment in the market, and the traders were freely willing to trade or take the lowest level sell without a stop. So that is the beauty of the players. One need to appreciate that they are most intelligent people on earth, and they are able to quickly maneuver the market and trap the traders and use all the media and other communication devices and effectively induce the traders to take the positions opposite to their intentions. Then with regard to the initial lows and the highs, in the case of Euro and GBP, initial low in the case of Euro was 1.3342 and they breached the low and formed a new low, 1.3334. You can see it in the live market quote page. So the high is intact, 1.3441, and that is intact, and from there you come across nearly about 90 pips down currently the market, and they could gain some levels towards close of the Japanese session, and then subsequently they are expected to hold the higher level and then suddenly make the next level drop for the week beginning. And in the case of GBP, you find that 1.5740 is the high, and they breached the high and formed a new, 1.3740 is the low, and they breached the initial low and formed a new low, 1.5737, and they are still holding up below that of 1.3740 currently, and they intend to make another drop, and probably they could gain quickly the level closer to that other high, because hardly about 33 pips, and they could then subsequently make the drop in the case of GBP as well during that late European session, or from that other mid-European session, one by one they could make the drop. And in the case of Euro also, they made the initial drop and then subsequently holding about 1.3342 and currently trading around 1.334951. So probably they could just gain some more level about 30-40 pips, or show a psychological level of 1.34 during the European session start, and then subsequently they are expected to drop it. So you can understand that I am not bullish or bearish. So you have to be very, very clear. I am just trying to tell you which way they are expected to make the moves in the market. Then accordingly you can plan your trades. So I am not simply telling that Euro will rise, or Euro will rise. So I am giving you both side moves of the market. So if you are not able to perceive it properly, then it is not my mistake. Then in the case of USD CHF, 0.9742 is the low which is intact, and 0.9777 is a high and is also not breached. So they could make a consolidation here and try to accumulate the buy position. I try to accumulate when the traders liquidate the long, when they make a small dip and things. When Euro gains level, immediately people think that CHF will drop, why not we take a sell position? And that sort of correlations when they try to make and try to take the positions wherever the moves have not initiated, and the traders are going to be trapped. And you know that when Euro was gaining and GBP was not gaining, and probably people would have thought that we can take a buy position in GBP, and then because Euro has already gained and it's not advisable to take a buy after the gain. But at the time, you would have noticed that GBP, they quickly dropped and then gained. So they hit the stocks and then gain. So it is not that if you do a buy and sell trade, you are safe, or a sell and buy trade, you are safe. Only when the quick move happens in the market, then if you try to take positions, you will be very safe. And during the quick drop, don't try to sell, and during the quick rise, don't try to buy. And you may call it as a breakout trade, but you have to be very, very smart to exit with a profit. If you don't, then you will be caught vulnerably with the highest level buy and the lowest level sell for the day. Then in the case of USD Yen, 82.58 is the low which is intact, and 82.98 has become the new high, whereas 82.91 was the initial high. So you can understand that slowly they are going to gain back all the losses what they have made in the case of USD Yen on Friday. So Friday USD Yen dropped just to give the trigger, and subsequently it is expected to make a contrarian move and gain back the levels and go to 84 and 85. So it is an extended downward stop, and they used it for non-farm payroll before making further rise in the case of USD Yen. Then in the case of Australian dollar, 98.82 was the initial low, and they breached, and 98.65 has become the low, and you come across 52 pips negative net change is seen, and 99.25 they made an upward stop and they could visit closer to that particular level towards close of the Japanese session or to the psychological level 99 area, and we have to watch how exactly they are doing it, sustaining it there, and afterwards you could come across that the drop initiated in Australian dollar as well. And they will not just like that go to parity, and they will try to make swings here about 200 to 150 pips and then only gain the levels to go to parity. Quickly you will not see that Australian dollar is going to parity, and only during that of the weekend or a month end they will try to make such extreme moves. And in the case of Canadian dollar, 1.0023 is the low, 1.0049 is the high, initial low on the initial high, and the initial low is intact, whereas the initial high 1.0049 they breached and formed the new high 1.0058, and 11 pips positive net change is seen when Australian dollar has dropped about 51 pips. So they could consolidate Canadian dollar here, and they will try to hold it at a lower level when Euro and GBP are dropping in order to make a downward stop in the case of the respective process, and then subsequently when Euro and GBP are gaining, before that they will quickly gain the levels in the denominator currencies, and then the numerator currencies are expected to catch up, and then you will come across the contrarian move ended in the gains in the case of the respective crosses. So week beginning, downward moves in the process, and afterwards you come across upward move in the respective crosses. So these are all the market reading we are able to perceive from using the initial lows and the highs, and you can do it on a daily basis. So there is no question of algorithm and things like that involved here, and you can also compare it as you make a note of the initial lows and the highs between 2:30 and 3:30 GMT on a daily basis. You can make a relative comparison of these levels, how they are respecting, how they are breaching, how they are going above or going below. Then accordingly find out whether the longs have become unfavorable for the week or the shorts have become unfavorable for the week. And then you can expect the weekend moves that they are expected to make. So these things you can derive it without the forecast and do the trades on a daily basis and a weekly basis. So I want you to develop the skill set to do this sort of analysis on your own. And with regard to the days in the coming week, let me go back to the forecast page. And so today is 6th. You come across, we could come across the week beginning false move, and followed by that you could come across on 7th there could be a significant gain in the case of Euro and GBP. And 8th will be the midweek, so you can expect either way stop-ins for the midweek. And then Thursday and Friday, I am expecting a reasonable gain in the case of Euro and GBP, and that could eliminate the fear of Irish problem, etc. And probably it will become the past, similar to the Greece problem. And followed by that, you could come across people will be talking about the year-end moves and things like that. Then they will follow mostly the technicals, and because not many fundamental data might be released, and you could come across technically the players will say that okay, the market has reversed, or the analyst might say that market has reversed, and probably you could come across the market gaining so much and things like that. So these are all the expected moves in this particular week. So don't become simply bullish or bearish, and try to read the market using the live market code page, understand what they try to do, and accordingly you hold your position or just exit out of the position and then try to re-enter into that other market. So when you overtrade only, you are being given the fear to cut the positions. So avoid overtrading. Take only one position and try to see that you are able to book profit in that particular position. Before going to the next position, you will be consistently earning from that other market. You don't require any sophisticated tools, etc. to do trades that way. So let me just come back to the other questions which are asked here. In Newegg, how do you define upward gap opening from close of the previous US session? So when US close is 1.3414, they opened it around 1.3423 and went up to 1.3441, and then from there they made that drop, and the upward gap opening was nominally less. Why? Because traders have turned long. Most of the traders have turned long. So after cutting the shorts or booking loss with the short positions on Friday, after seeing the non-farm payroll reaction in the market, more than that of the technical, more than that of the fundamental analysis, they have just followed the technicals and found that market is not going to drop, and many people were taking the sell positions, and they said that, okay, in the case of euro, I had taken a sell around 1.36. I'll book profit initially around 1.2970 area. Then further, I could book profit in 1.27, 1.26. All sorts of imaginations. They had done it without any trading plan of keeping stop at entry and things like that. So now you come across that when they have cut those shorts and turn long, the players drop the market. So players have got a very clear objective of making money from that of the traders. So when the herd of traders turn long, they drop beginning and induce them to liquidate the long positions, and then subsequently when they turn short, thinking that technically era has to correct, and what the gain was seen was only a correction before the downward channel. The channel is intact, and then subsequently the players rise the market and continue to give the surprise. So upward gap opening is nothing but a few pips, or sometimes 20 pips, 30 pips, 40 pips like that, above that of the Friday close, and then hover around there and make the drop up after an upward stop, and obviously they have to drop. Francisco, could euro and GBP test to lower levels today and tomorrow to create uncertainty and then rise again to the downside? Again, or the downside is very limited after Friday bounce. So it all depends, very well how the traders are taking positions. So when they are holding now, probably many traders, because already about 100 pips drop has happened from the high, probably the traders could take buy position, whereas they had done only 68 pips negative net change. So they have got a potency to go up to 150 pips or 100 pips or 70 pips. So we have to see how far they are establishing it. So euro, they could hold it already. They had done about 70 pips, and they could hold around that of the psychological level 1.33. Whereas GBP, they had done only 39 pips. They could make a quick drop in GBP below that of 1.37. That will create that bearishness, and then immediately traders will think that GBP has dropped, euro has not dropped. So the next one, euro drop, we can expect they will try to take a sell position there. Then they will gain euro first and followed by that GBP. This is how they do the trap. And if you find on a daily basis how they are doing the trap moves, rather than simply focusing on the levels, focus on the moves, the type of moves they make, whether the first move comes in euro or the first move comes in GBP and things like that, you can understand they have only 4 possible moves. One, they can rise euro and GBP simultaneously. The other one, euro, they can gain first and then followed by GBP, or they can gain GBP first and then followed by euro. These are all the 3 possibilities you come across. Or they gain euro and drop GBP, the 4th possibility. So if you understand that, you will be able to find out, okay, what could be their next move. Then Santosh, to be honest, the criticism you got was not on the market reading, but timing of the market reading. See, whatever the criticisms, Mr. Santosh, let me tell you, if it is able to really help you in planning your trade, I am really happy about it. It is easy to point the fingers on others, but ultimately what is more important, my objective is you should be able to define your trading system and you should be able to trade effectively rather than spending most of the time in making criticisms in the blog. Yeah, I do understand that there are a lot of limitations with regard to market trading. and innumerable limitations with regard to the algorithm. You need not point out that on a monthly basis. Do you think that is, if you don't point out, I'm not able to realize it? So I'm doing a very objective analysis with regard to the forecast algorithm and also with regard to the market reading. And wherever I come across the changes, I am displaying it. And understand that I have got other work to do also. And if you ask the question, if you immediately I'm not able to answer to the question, if you think that I'm upset, or if you think that I'm not, telling that sorry, the forecast has gone wrong, and these are all nothing but your own derivations. So a constructive criticism is something different rather than just creating the criticisms out of frustrations. So you should be able to demarcate. And also the most important thing is when you make such criticisms, it is triggering others to participate in that, and invariably their focus in the market is also getting diverted. No, I take so much of effort to see that the traders are eliminating the fear from that of their mind so that they will be able to perceive the market effectively. And if you just induce them the uncertainty by making such comments, no, obviously all my efforts go waste. The small traders, it is not that first earning is important. First of all, they have to get rid of the market fear. Then they have to understand the market moves. Then thirdly only they will be able to earn it, depending upon the usable margin they are putting in the market. So I am trying to guide them because it is not the same type of audience every day I am addressing. I come across innumerable audience, they are just joining, and there are so many who are just left and things like that. But I have to get the feel of the overall reactions in the blog and also see the market and try to help by giving the objective view with regard to the market. So if the market has gone against the forecast, I can simply say, sorry, the forecast has gone wrong, but that does not help anybody. I understand that the forecast has gone wrong. Okay, what is the remedial measure I can give it as an update so that the traders will be able to earn from that of the market without going for a distressed trade? Hope you are able to understand, Mr. Santosh. Now we are talking about the timings of the market. So I explained many times the timings of the market I estimate based on certain algorithms, which is a scientific statistical analysis and applied statistical analysis with which the timings are calculated. And you know that in next 30 minutes you can commit to your friend that I am coming to your place, and in between that there can be so many obstacles, or you may reach even beforehand. So as far as the timing is concerned, we try to be punctual. We expect the market to be punctual. But there can be a delay or there can be a preponement, and which is not in my control. Please understand that. And you are expecting me to give a spoon feed and perfect and do all the analysis by myself without even putting an effort to understand why my trade has gone wrong. Why should I simply listen to Dr. Sivaraman? There is no need at all. I have just learned from various analysis, various analysts. Okay, there are various ways of analyzing the market. Let me develop my own system. Ultimately, my money I have to protect. Nobody else can come to my place and protect my money and make me to earn money. Then drop. What is expected in GBP for the weekday by day? Okay. GBP is expected to make an initial drop today during the late European session. That is again an expectation, and they may drop or may not drop. We have to read it by seeing how exactly they are respecting the initial lows and the highs. As per the algorithm, the drop is expected and also the rise is envisaged. I agree news may be manufactured, but they understand the market in terms of how it will make the move based on the moves based on the news and taking advantage of it. See, I'm able to recommend a buy and sell trade at the highest level and sell and buy trade at the lowest level. Because I can recommend sell and buy trade at the lowest level, but invariably, if you don't keep stop, you will be vulnerably. So GBP could go slightly below that of 1.57 probably. The momentum goes well, then they are expected to go higher, above that of the high. Then balance. One should watch today and see what the true intentions and only take good setup. Yes, obviously on a daily basis, whatever others say, you can keep it as only as a guidance and you have to do your own analysis. And only then, no, you will have the confidence. And if somebody decides for you, suppose somebody is making a decision on your marriage or somebody is taking a decision on your job, you will not get the real feel of it. You have to take your own decisions on that. You should get convinced on the system and focus on that particular system. Then Harry, as you said, there will be slide in Euro and GBP today, and what level can come down? So with regard to the levels, we have to see, sir, it depends upon the intensity of the move and also the volume. Okay, that varies from time to time. See, my main purpose of giving the forecast during the late Japanese session or the early European session in the blog is to further read one session move, then subsequently try to fine tune and give the forecast in the blog, and then also if there is a variation from that of the expected moves, I give the updates in the blog, because that will be the medium I'll be able to communicate. So during the Japanese session, I am able to present the Asian session webinar, but followed by that I'll follow it in the blog. So it is a continuous process from the Asian session and from that of the European session, the blog, and till US session. So if the going is good, I don't give any update. I only answer to the questions which are asked pertaining to the market, because I cannot enter into arguments. I don't have time for that or justify my forecast is correct or wrong, and because that is not the thing which is going to help anybody. So it is for the individuals to take decision. If the forecast is not suitable for their trading style, then you just have to ignore that and just look into other aspects. If the forecast is beneficial, okay, then probably you take it as a guideline. And I don't strictly follow it 100%. I am recommending don't follow the forecast 100%. Hope you are able to understand. Use the trading strategy to limit the risk and maximize the profit. Then Francisco, do you think Euro CHF can go below 1.30? They have already done it at the last month end, and they may briefly touch, because Euro CHF, you see that 1.3031 current level and 1.3025 is the low, and if they want to hit the stops below 1.30, they can visit it. Nobody can control it. No? And they know very well where the stops are, and accordingly they make moves. So we will not be able to statistically calculate that, okay, it is a strong support, so they will not go below that. They can breach, and there is no guarantee that the market has to respect the support or the resistance. And 1.3254 was considered as a strong resistance, and they have breached it. And simply we keep quiet. Okay, they just breached the resistance, and market has gone up. So nobody questions why that particular resistance was breached. That is how the market is being structured. Then word. What low could we see today in GBP? GBP could go below that of 1.57, probably 1.57, 5667 or 5673. That is 25 pips below the psychological level. Sometimes even 50 pips below the psychological level, they can make it. Because GBP is the currency, they use it to create the market sentiment, you know very well. In looking at the expect forecast regarding on Euro, I am not mistaken. You are the one still stick to your earlier forecast. No, I am not trying to take any credit, sir, because I am not here with the ego or with the self-pride and things like that. I'm here to help people. Okay, so you should understand that. I'm an ordinary person. I'm a simpleton. If you come to my place and you can see my living style and things like that, and there are so many people who have taken the training and visited me, and they would have seen me with an ordinary dress and things like that, no extra fittings, etc. Because I am interested in helping people, and what's the knowledge I gained, I want to share it with others. First of all, to eliminate the fear. No? Because, for most of the crimes in the world and most of the wrongdoings in the world, the prime cause is either the fear or the anger or a desperate condition. They are all out of emotions. So any decision taken out of emotion will end up wrongly. So I am here to mainly remove such fear and emotional understanding of the market. So you try to control the emotions and look into the market objectively. That is what I am trying to do it here, sir. Then Pico, after week beginning false move, do you see Euro and GBP? Yes, Euro and GBP are expected to gain again. I explained that from tomorrow you could come across the gains significantly, and Wednesday there will be either way stop-ins to confuse players and traders, and then Thursday and Friday more aggressive gains could be seen. Yeah, they could go above the weekly highs, and that weekly permitted levels, they can gain about 350 pips in the case of Euro and 600 pips in the case of GBP. They could try to achieve it for year end. Then Pico. And Pico, tomorrow can the week beginning false move continue? We have to see how far they are doing it today. And if the traders are not liquidating the long position or not stopping out, then they could continue it for the next day to start with during the Japanese session or the European session. Then rise it. Otherwise, they are supposed to, as per my algorithm, they are supposed to confine it only for today. Devangam. Why do you say that the initial lows and the highs between 230 and 330, whereas actually it is normally between around midnight to 230? Probably, see, I'll not be able to answer in details to your questions. See, I have gathered information, okay, sir? And based on that information, how the players try to act on the market, I gathered it indirectly and directly, and with which I am trying to give these things. And certain things I may not be able to explain it in the public forum. DD. Don't you think that the volatility will be reduced this month? Not at all, sir. That is what most of the people are thinking that. And if you check the yesteryears with regard to the December moves, you can see that in 50% of the years they just made subdued moves, and 50% of the years they made very high volatile moves during the month of December. And don't relate it with stock market or relate it with commodity markets, and don't think that the past performance has to be repeated, and they can just do opposite also. Then Bill. If the initial highs and the lows are breached during the Japanese session, don't return during the European and US session of the day. Do you still refer to the initial lows and the highs? Yes, still they are referred as the initial lows and the highs. And tomorrow during the Japanese session, how they are setting the initial lows and the highs? If the initial lows are set below that of yesterday's low and the high, below that of yesterday's low, then they could make for the drop and then reverse the market. That is why I am taking the initial lows and the highs and making a comparison with regard to the previous lows and the highs. After to the new highs and the lows regarding your strategies and the beginning of the European and US sessions, yeah, we have to make the comparison of the initial lows and the highs on a daily basis and understand where they intend to take. And suppose today somebody has taken a buy near that of the initial low, and he was able to book profit during the day, then obviously you can understand that the traders are trapped with the short sellers. That is why they are given the profit to that of the long holders. So when the players try to trap the short sellers, the buy and sell traders are benefited. When the traders try to induce the long holders to liquidate, the short sellers are benefited. Okay, that means what? The players drop the market and buy. So during such drop, one could do a sell and buy trade quickly. And that is fine. But we have to understand how deep they are going to drop it. Whether we will be in a position to quickly use the trading strategy of keeping stop at entry and able to exit out of the sell position. And see, there are two things. Now they are sustaining near the low. Okay. So a buy and sell trade in which you will be able to find that they are keeping the low and any downward stop, you can take a buy. Whereas a sell and buy trade, they quickly gain the levels and they are not sustain the level for more than 30 minutes. At that time, one can take a sell. And if you take a sell, then obviously you will be able to easily book profit. They are going to hold it near the low. And on Thursday, from 1.32, they dropped it to 1.3067. Within a fraction of a second, they reversed it to 1.32. In such a time, it is extremely difficult to do a sell and buy trade. So I try to recommend a trade wherein you will be able to easily exit. So entry we can do it. Exit is also equally important. If you fail to exit, you should not make loss. So I am trying to give that sort of trade. That is why during the drop, it may appear that I could have done a sell and buy trade, but you could get trapped vulnerably at the bottommost level without understanding that. Like a fool, we are selling at the lowest level. So that is bound to happen, because if I say that why not you buy around 1.31 or 1.30 or 1.29, they will just yell at me because the market was dropping and all the charts were dropping, all the analysts were telling that it is dropping, and nobody will just agree with me. But if you continue to do like that, you will be never in a position to earn successfully from the market. Ultimately, you know that the players use all the facilities just to create the market sentiments. And they make the market moves in such a way so that analysts can say that it can go down. So either indirectly or directly, the players are benefited out of that. So it's a man-made market. Obviously, somebody is making the moves in the market and somebody is propagating Irish problem, and suddenly why they have stopped about it and talking about US problem. So we have to ask those questions. Then, how high can we have seen GBP in this week? GBP could gain to 1.60 because hardly about 300 pips, and they have got a potency to rise about 600 pips in a week. Then balance. How would you read if the live market code page saying Euro AUD is dropping, but AUD USD is dropping against in other currencies? What does that? So whenever you are referring to Euro AUD, obviously Euro is a numerator currency, AUD USD is a numerator currency. AUD is a numerator currency in the major, in a commodity pair. So obviously you have to see the net change in the case of Euro, a net change in the case of Australian dollar, and from there you have to derive whether they are going to drop it or not. So in the case of, for example, Euro is 62 pips, negative net change. In the case of Australian dollar, 46 pips, negative net change. They are moving in tandem. Only variation is GBP has made a lesser drop. And with regard to denominator currencies, they are not gained equally. So that means they intend to make a contrarian move. What? They wanted to hold the denominator currencies with a nominal gain and drop little more the numerator currencies. Then afterwards, reverse it. So you could come across Euro AUD, you could make a drop and then come up. And if drop in the case of Australian dollar is more, then it will drop more. If Australian dollar, and similarly, if the drop in the case of Euro is more, is a numerator, sorry. If Euro drops more, then Euro AUD is expected to drop. Australian dollar, if it drops, it becomes, you find that it is also having an impact and it will try to bring down, but in relation to the Euro drop. So that you have to identify, calculate it, calibrate it, and try to use it as a quotient or a ratio. Then Oscar, you dropped the buy level for USD CAD significantly from 1.0239 to 1.0066. Do you recommend by someone that took your initial buy level with a wider stop loss? See, there is no need to keep a wider stop loss, sir, because you have to understand, if you are taking a buy and then try to keep a stop of 30 pips, if you are stopped out, wait for 30 minutes and see what they are doing it, and understand that you exited with a 30 pips loss. You should be happy about it, and then subsequently review it during the next session and try to see whether you can do a buy and sell trade. They continue to cut the initial low, then wait for them to stop cutting the low for 2 hours, because you know that whether they are making an intentional move or an extended move. Intentional move, throughout the day they will try to drop or try to rise. Extended move, they do it only for 2 hours. Then subsequently you initiate a buy. So this is very, very important in identifying the type of move in order to enter into the market. See, at every time you could come across, the levels will have some significance. But the next day, say for example 1.33 was considered as a good short level last month, whereas now you find it is a good buy level. So the perception varies from time to time. So if you focus more on the levels because you are trading, then you fail to understand the market. Friends, many questions. Do you think that Euro Yen might move higher? Yes, USD Yen is expected to gain about 83 again. So all the questions are over. Let me go back to that of the PowerPoint presentation. So expected market move, Japanese session, volatile moves and firm up. So some are firming up, they stopped cutting the low and they could make a firming up. And European session, volatile move, and then towards close there could be a slide, or from the mid session there could be a slide, and watch how far they are doing it. And if it is an extended move, they stop cutting the low for more than 30 minutes, then you try to take a buy. If they continue to hit the stops, continue to hit the low and go down further, then wait for 2 hours because they are making an extended move. Then wait for 2 hours and then try to initiate the buy. So when they drop, try to buy. When they rise, try to book profit. Okay, that way you can do the trades. Then during the volatile move, during the US session, volatile moves and rise are the expected moves for this particular day. So with regard to the initial lows and the highs, they breach and then come up after 1.3348. So they could firm up towards close of the Japanese session. GBP again, they formed a new low 1.3734 and then cut that low by 1 pip, and again they have come closer to the 1.573940 area. So if they go above, and they could firm up little more and open high or during the European session and then started the drop. And they try to hit the stops either way. Keep it in mind, they are focused only on the earnings. Then CHF, they are not cut the low or the high. Yen also, they are not breached. They breached the low, but they are not breached the low, but they breached the high in the case of yen. You can understand they wanted to gain back. And in the case of Australian dollar, they have breached the low, and they are still staying below that of 98.82, and probably they could come up quickly and then go down again. And Canadian dollar again, they are not breached the low and they breached the high. So this is how they make the initial moves after setting the initial lows on the highs. Then every session you have to watch, depending upon the trader's pending position, they alter their moves, they create the bearish and the bullish sentiments alternatively. Thank you one and all. See you again tomorrow during the Asian session live market analysis. Meanwhile, I'll post it in the blog and take it and try to answer to the questions which are asked in the blog. Thank you one and all for your patience and time.